share this stuff around. Let's go ahead and get this thing rocking this morning. That's right.
The new Black Wall Street. Do it right, build wealth, live life, economic empowerment, real tips, insight on the new Black Wall Street. It's on the new Black Wall Street. Here's your host.
All right, my beautiful people, thanks so much for tuning in. This is the ERGJ Certified Financial Educator and founder of New Black Wall Street. And we're with you with the New Black Wall Street, Money and Power. And what's that all about, guys? There's two things that I believe that we've been taught not to talk about. Number one is going to be economics. That's going to be the money part. Number two is politics, which is the power part. And money and power is nothing more than just saying this is the cash flow and this is the cash rules. This is how the money flows. This is how the money is dictated. Money and power, economics and politics, the two areas we've been taught not to talk about. I think we should talk more about, because how many of us can use a little bit more money? So the whole goal here is to talk about what's going on in the market, to find ways to make our money work for us, and to lead us into the direction of some investment opportunities if they are out there. So we'll be doing a quick recap on what happened on Friday, and we'll also do an outlook, a look as to what's going to go on today as we hit the stock market, as we hit the market starting at 9:30. So hopefully everything's been well. Now I do have a couple of announcements in case today's episode is brought to you by True Detergent. That's right, True Detergent, black owned and manufactured right here in the Atlanta area. We're doing free delivery to your doorstep. You give us a call at 678-851-2400. That's 678-851-2400. I'm putting that in the comments below as well. It's 101 ounces. It's 4 times concentrated. You only need a quarter ounce or a quarter cup in order to wash your clothes. That's right. I only need a quarter cup to wash your clothes. 678-851-2400. Now, here's the deal. You're going to wash your clothes anyway. The question is, are you going to practice what you preach by circulating your dollar right back within your very own community by supporting your very own brand? That's right. True Detergent. Make the switch. Not only that, we also got Core Oil as well. What I'm going to do for you here, this week we're going to run a special. You're going to get the True Detergent, black owned and manufactured detergent, and the black owned and manufactured toothbrushes. Package deal, $15. That's right. You're going to get both for $15. You can do that this week. That's going to be the week of March the 6th. So go ahead and order your detergent. Get your toothbrushes. Got 2 black-owned products right in your household for $15. We're going to do that just for you, just because you big guys have been so supportive. True Detergent. Make the switch. We do delivery to your doorstep. Now, we do have a couple things coming up as far as Club Millie is concerned. We do have the Club Millie plan presentation. We want to go ahead and get signed up for that. That's going to be right there. You go ahead and click that link. Sign up for that. It's going to be a free presentation for you to learn all you need to know about Club Millie, what we're doing, why we are so successful, and why we've been able to get over 100 black folks in a month to start working together towards group economics, towards building the Black Wall Street. Yep, there's a reason why we are successful. You want to find out what's going on there. Also, we have coming up the Dow 30 investment session. That's where we're going to go through the top 30 companies in America and going to break them down. This is great for beginners who have never invested before. You want to come have a good time. You want to talk about some of these companies and see what we are seeing and get some investment ideas. You want to sign up for that. It's going to be the March Madness Dow 30 investment session. We're going to be going to the top 30 companies, most significant companies in America. Companies like Walmart, Nike, Apple. Matter of fact, this week we are going to discuss Coca-Cola, 3M, Goldman Sachs, and Johnson & Johnson. So you don't want to miss that. Go ahead and sign up for that if you so choose to. Again, this is directly for the new investors, the people who've never invested before. It's a great time for you to learn about investing. And then we have also, we're going to have on Tuesday, we have our first time home buyer session. That's from Club Millie as well. So if you're a person that's looking to get a home, what's going on, Wendy B? Good morning. If you're a person that's looking to buy a home for the first time, you want to sign up for that. That's going to be our Club Millie first time home buyer session. So you get all the information that you need to know, what you need to know as it relates to getting your first home. All right. So that's all I have as far as announcements are concerned. Let's get right into what we're here for today. And that's to talk about money and power. What's going on in the market? What has happened? So let's start with a quick recap. Got a lot of stuff to cover today. The recap, the Dow was only up 2 points on Friday, NASDAQ 9 points on Friday, and S&P 500. So those are 3 different indexes that stocks are actually a part of, and that give us some different indicators as far as where the economy is going. Most popular stocks, you had GoPro was down 4%, Macy's was down 4%, Costco was down 4%. And some of the airlines actually had a good boost. So airline companies, American Airlines and Southwest, are up 2% respectively. Not a whole lot going in the market that day. Oil right now is at $53 a barrel. That's a wonderful sign for me. $53 a barrel. We do have also gold is trading right now at $12.31 per ounce, $12.31 per ounce, and silver at $17.86 per ounce. So you have gold, you have silver, you got the oil. Some of you guys want to be in precious metals. You got to kind of know what the price of those precious metals are, if they're rising or falling, bring you some type of appreciation on your investment. Now, over the past 3 months, there's sector performance. Over the past 3 months, electronic technology has been up 16%, consumer durables up 13%, technology services up 12%, and consumer non-durables up 11%. So we've seen finance continue to slide on down. And then our laggards in the market over the past 3 months, energy minerals was down 3%, retail trades up 6%, and communications up 6%. Now, our emotion that's driving the market today, right now we're currently sitting at a 74, which means we're in a greed mode, not extreme greed like we were over the past couple of days. So, so sellers are starting to come and get some pressure on the buyers. We're starting to move our emotion down, our volatility down as well. Still not really looking to be in a position where you want to be buying a whole bunch of new positions right now. You're probably in a game of hold if you have some positions, or you're taking profits if you already gained some of your positions. Because here's the deal. Warren Buffett says this: to be fearful when others are greedy, and to be greedy when others are fearful. You want to be fearful when others are greedy, and greedy when others are fearful. Now, matter of fact, that reminds me. I want to take a look at this Snapchat thing that's going on, because I know I believe we had some rise in Snapchat over on Friday. So it might have some people feeling pretty good about their position. I know we got to give you an update there, because here's the deal. Pretty soon you're going to be, Snapchat is going to be old, and people are not going to be talking about it. So it's currently sitting at $27.09 per share. So it actually did bump up. It looks like 10% since it's closed on business on Thursday when it opened. So it did jump up 10%. Now it depends on where you were in this position, because again, it's only $2.61. So when you factor in your cost to do business, which is probably $10 in, $10 out, that's $20 that you have to cover as Snapchat moves if you only got one share. So depending on how many shares you got, you still might be in a position where you have not gained much money. It's only jumped from jumped $3 over the past 2 days. It was all the way up to 29, which was in a great position for you to actually sell on Friday, but most people probably aren't watching it like that. And it came back down to 27. So we'll see how it does today. We will see how it does today. So let's take a look at what's going on in the market today and see what we need to know as it relates to today's market. All right. So here we go. GM is in the news. They are looking to exit Europe. So General Motors has reached a deal to sell its money-losing European operations to the French maker Peugeot and Citroën cars. Announced early Monday, the agreement will create a new European autos giant, bringing the Opel and Vauxhall brands under the control of France's PSA. GM is also selling its European financial arm to PSA and French bank BNP Paribas. The combined value of the deal is about $2.3 billion. Shares in PSA were 4% higher in Europe. So GM has actually been on this process of, that's GM. So GM is in the process of leaving Europe, leaving that market. The Brexit, it continues. And so they're selling off some of their assets, so they can probably look to streamline more of their operations here in the States. Deutsche Bank is also in the news. Deutsche Bank is raising billions. Deutsche Bank is asking investors for $8.5 billion to improve its financial health after 2 years of heavy losses. So they're actually trying to do some fundraising to stay in business. That's not a good sign. Germany's biggest bank announced plans for the huge share sale on Sunday, along with another overhaul to its strategy. So they're actually creating shares and being able to sell it so they can raise capital. Deutsche Bank, a bank, is looking to raise capital. So Deutsche Bank said it will seek to raise about $8.5 billion in the coming weeks. Its fourth capital hike since 2010. The four added up to a total of $32 billion, more than the bank's current market value. Not a good look. Not a good look for Deutsche Bank. Shares in Deutsche Bank were trading 6% lower following the announcement. They are trying to ask for more money than they're worth. Not a good look. Not good at all. Global markets, European markets were all awash in red on Monday, with top indexes in France and Germany both off more than 0.5%. Asian markets ended mixed. The Nikkei shed 0.5% after North Korea fired 4 ballistic missiles into waters off Japan. Chinese stocks advanced after the government said Sunday that it's targeting growth of around 6.5% or higher if possible in 2017. So Chinese stocks might be a good place to be as well. The government's talking good. They got good outlook as far as their 2017 year is concerned. So that's a good thing. All right, the Fed sets its U.S. agenda. U.S. markets closed flat on Friday after Fed Chair Janet Yellen, always yelling something, signaled that an interest rate hike would likely come when Fed leaders meet next week. Markets are locked, loaded, and ready. A move is priced in near unanimously expected by forecasts, who on balance now also agree with the Fed's projection for 3 moves this year. The only thing that could change the Fed's plan is weak economic data, giving an extra significance to Friday's U.S. jobs report. Now, U.S. stock futures were pointing to a negative open on Monday, but they remain near record highs. And here are your earnings for today. Looks like we got data in U.S. factories will be released at 10 a.m. Eastern. Economists expected an increase of 1%. Gallup's U.S. consumer spending measure report will be published on Monday. And a smattering of U.S. companies are set to release earnings, but no market heavy hitters are on schedule. So nothing real major going on today on Monday. This will probably be a day I'll take off. I'll take a look at a couple things, but I'll go and take care of some of the other errands I have to run. The Gallup U.S. consumer spending measure is the only big thing on the market today. Now, I did want to take a look at a couple of things. One, I want to talk about Amazon. The rise of Amazon is leaving more retailers in intensive care. We got a depressed market for retail. So a growing number of traditional American retailers are in intensive care, and Amazon put many of them there. The number of distressed U.S. retailers has tripled since the Great Recession and now stands at the highest level since the end of the downturn, according to Moody's Investor Service Report. These companies are grappling with intensive competition, erratic management, and limited financial flexibility, said Moody's. So Moody's is a company that rates companies for the most part. That's what Moody's does. Now, the 19 retail and clothing companies on the distress list include Sears and Kmart owners, Sears Holdings, SHLD, J. Crew, Payless, Claire's, Rule 21, and True Religion. The report is a sobering reminder of the consequences of the rise of e-commerce, especially Amazon. So again, if you are a brick and mortar store that has no online presence, I don't see any online presence for any of these companies. Sears Holding, who goes to Sears.com? Who goes to jcrew.com? Who goes to Payless.com or Claire's.com or TrueReligion.com to order stuff? I don't know if anybody else does. So stay away from these companies that are going to be out of business soon, that probably have to sell their stuff to Amazon in order to sell their stuff. So recent weeks have provided new evidence of the struggles of traditional retail. Traditional retail is a thing of the past. Sears stock has recently plunged to an all-time low. JCPenney announced plans to shutter up to 140 stores, and Target shocked Wall Street with terrible holiday sales. All that comes on the heels of tens of thousands of retail layoffs and the bankruptcies of Radio Shack and Sports Authority over the past 2 years. It's no wonder the Amplified online retail ETF iBuy has vastly outperformed its physical peers. The online ETF. So here's an online ETF you might want to look at. Is going to be iBuy. That's all about online retail positions. It's an ETF. So if you wanted to invest in online retail, right? You know that traditional retail is going out of business, and you want to invest in online retail. Well, you can do that by getting an ETF, which is going to house plenty of retail companies that are prominent on the online space. That's iBuy. Okay, so I'll give you some clues there. The online ETF is up 18% since its debut last April, compared to 4% decline of the broader S&P retail ETF, which tracks mostly traditional retailers. So if you want to get into retail, you want to invest in retail, you want to invest in online retailers, then go to iBuy. And let's go. You know what? Let's just do it right now. Let's just do it right now. Let's take a look at what are the components of iBuy. Well, we're going to do that for you today. That's going to be my gift to you guys. My gift to you. Let's see what this houses here. So here are the top 10 holdings for iBuy. All right. Nutrisystem, Stamps.com, eBay, Netflix, FTB, I don't know what it is, FTD companies, Overstock.com, Wayfair Incorporated, Amazon, Copart, IAC, IAC Interactive Corporation. These are the top 10 holdings of this ETF. So just think about it like a mutual fund or a basket of stocks. This iBuy ETF is an array. It's a basket of stocks, and that basket includes Nutrisystem, Stamps.com, eBay, Netflix, Amazon. So here's the deal. Say, for example, you're saying, hey, I can't afford Amazon. It's $800 and something bucks. I can't afford Amazon. Well, what you could do is get an ETF that's going to have some Amazon in it. So in this ETF, you get Amazon. In this ETF, you get Netflix. In this ETF, You get eBay, and you want to invest in all three of those. Well, instead of just paying for one share of one of them, you could go to an ETF like this and potentially have exposure to all three of them. And let's just see, over the past year, this ETF has risen from, I don't know, about $22 a share. It's now trading at $28.68. So instead of buying just one share of Amazon, you can look at an ETF which will have some components of Amazon in it, along with other companies, and so you can automatically be diversified for $28 instead of just having one company for $800 something. You can have 10 companies for $28. You see? So I'm just trying to give you guys some options so that you know what's going on. It's some options for you to think about and consider if you're like, hey, I do want to invest in online retail. Okay. All right. So I buy. We need to add that to our Club Millie watch list. All right. So clearly there is going to be some companies that are going to be going out of business probably in 2017, 2018. Just want to be aware of that. Want to stay clear of these retailers who have no online presence. Brick and mortar stores are being forced to adapt, and they're just not adapting quick enough. And so that also tells you what else does that tell you? That also tells you that if you are like a customer service representative for these retail stores, it's time to start getting some new skills, because they're not going to be around long, and you don't want to be the person that's being laid off just because you saw stuff coming. You saw it coming down the pipe, and you didn't make adjustments. You didn't learn some skills that would be relevant for 2017, 2018. All right. I think I belabored that point. Just wanted to get that to you guys so that you guys knew. So we looked at Snap. We looked at iBuy. We looked at this whole Amazon thing. We talked about the Dutch Bank. We also talked about GM as well. And then let's see if we had any other. Oh, I wanted to add this as well. So we have the Consumer Reports. They're considering cyber security in product reviews. So Consumer Reports, an influential U.S. nonprofit group that conducts extensive reviews of cars, kitchen appliances, and other goods, is gearing up to start considering cybersecurity and private safeguarding when scoring products. The group, which issues scores that rank products its reviews, said on Monday it has collaborated with several outside organizations to develop methodologies for studying how easily a product can be hacked and how well customer data is secure. So it's going to be good information for the consumer as it relates to finding the best protection for your online presence. Cybersecurity is a big thing, and they want to be able to rate these products and services for us to give us an indication. Now, of course, are they really going to be trying to lead us to buy any one particular thing? So that's going to be a good thing for us as investors. If they come out with this report and they rate one company as the best and another company is bad, well, then some money is going to start going to that great company and probably going to cause that company's stock price to rise. So that's the only thing you really need to know about that. And then also we have Alphabet and Uber, or Google and Uber, back in the news. Alphabet lawsuit against Uber cements an uneasy marriage. So when Uber Technology was raising venture capital in 2013, it was one of the hottest deals around. And no one was more eager to write a check than Bill Maris and David Crane of Google's venture capital arm. Not everyone at Google Ventures agreed, but the firm already had an investment in a competitor sidecar, and Uber was demanding that what then looked like a sky-high valuation. Maris and Crane prevailed, and the deal is now regarded as Google Ventures' greatest success. On paper, the firm's initial 2013 investment of $258 million guaranteed about 14 times its value over the next 3 years to more than $3.5 billion. But now, Alphabet, Google's parent company, is suing Uber for theft of trade secrets, alleging that one of the top engineers in its self-driving car program decamped with thousands of confidential files, including designs that helped him start self-driving truck company Otto and then quickly sell it to Uber. Uber denies those claims. So it is going to be some heat going on here as it relates to this self-driving automation thing. Uber, I don't know, man. They just seem to have they got some sketchy practices as it relates to doing business. And I don't know if you want to bark up Alphabet's or Google's tree. You know what I'm saying? Google is huge. I know Uber is coming on, but man, if this is true, you know, if they suing, if it's true, even if it's not true, it just makes Uber look bad. You might be in, someone talking about you stealing is just bad. So anyway, so that's what's going on in the news today, man. It's really not a whole lot that's going to get the crowd giddy today, but it is some information that you need to know as we move into March 6, 2017. Well, guys, hopefully you took something away from today. I did. I definitely took something away. That iBuy is something I'm gonna add to my my watch list. I start to look and see if that's a route that I want to go. If I want to have a piece of that Netflix and Amazon and eBay and stuff like that. But anyway, this is ERGJ, your certified financial educator, founder of the New Black Wall Street, saying thanks so much for tuning in today. We'll be back tomorrow with more and more info. Have a great day.
The New Black Wall Street. Thanks you for joining the show. We gave a lot of great tips, but it's time to go. Take the knowledge we shared, hope you use it and grow. We will see you all there in the next episode.